if the banks are able to invest your money and make something from it, then putting your money in the bank, you should be paid monthly. Hi, charming family and viewers, welcome back to the channel. Thank you for joining me on this segment of my financial stability series. So, today we're going to talk about banks and the fact if you save your money in the bank or if you keep your money in the bank, how much are you getting paid for that money? Because you should be getting paid, not no 0 cents or money like that, but you should be getting paid at least 2, 3, or 4% or even more. So I will be delving into that, but before we get into that, some of the ways that these banks make their money. And so if they're making money, particularly with your money as well, you should be profiting from that, right? So there are particularly three ways, are main ways that banks make their money, primarily from lending people loans. So when they lend these loans, the interest that they accumulate or that people have to pay back for those loans, the bank makes money that way. So if you had to, I have notes here, but if you had to take out mortgages or personal loans, business loans, gains from each of these interests would be how the banks make their money. Interest on these loans are much, much, much higher than what they're lending you. So when each customer have like loans and they pay back the interest on these loans, the banks make something called a huge interest spread. Another way that banks are able to make money is through fees and charges. So if you have your bank account, for example, whether business or personal, to keep those accounts open, they may charge like a monthly maintenance fee, and those fees adds up. But there are ways to also get around those fees, much of which we probably know, but I could also go into that. But there are ways, for example, you could have money going in from one account, like transfer each month like a little amount, so that those fees are avoided. And even so, there are some accounts that you cannot run away from the fees. So banks charge fees for many services like ATM withdrawals, overdraft if you don't have enough money in the bank, account maintenance, wire transfers, credit card, and so forth, those transactions. So all these fees contribute to the bank's revenue overall for all their customers. So that's like the second way of how these banks earn money. Another way, or third way, that the banks earn money is to investing. Banks make money by investing, and they invest your money. They have other money as well, but they invest. Your money is a part of that investment. So this is where you come in, if you see where I'm going with this. So they invest in financial markets and bonds, etc., with your money, right? So if the banks, think about it, and I brought those things up to say this, and I had to learn this and I had to do my research. If the banks are able to invest your money and make something from it, then putting your money in the bank, you should be paid monthly. Not couple cents, but at least something decent for having your money there. So if they're not paying you like something decent a month, hello, shop around. Shop around and get the interest that you deserve. Speaking of financial stability, it is your money. You have the talk, you have the say. If it's somewhere, this is just general information, but if I have my money somewhere and I see that over there this bank has a different benefit with high amount, they have high yield accounts, higher percentages in terms of APR, interest per year, interest per month, I am going to go with the next bank, even if I'm using like a prominent bank to save a certain money. I would put my money in a different bank who is paying me a much more higher yield. And so, if I knew this, or I had to research myself, but way years ago, if I've been doing this years ago, like, it would be so much. But I'm saying, and I'm sharing now, and share with your family. There are many places. I'll stick like places that have high interest and have high yields that are actually paying you for keeping your money there, because you should be paid. Speaking of financial stability, they're getting finances, they're getting income, and so should you. So should you be getting income. And so this is what I wanted to share on this segment. This is what I wanted to share. So, I don't want to name out per se many any specifics, but there are, different banks that I'll show that really pays out. It's up to you and it's your choice if you want to go with those banks. But you have things like Discover, you have things like Credit Karma, you have things like Capital One, you have many others who pay these high interest for keeping your money there. And so, we are the customers. So if we are giving you business, you should be able to treat your customer right. Am I right? So I am here to stay on this financial stability journey, financial freedom, financial independence. You deserve it. You're worthy of it. Let's go. Thanks so much for watching, and I'll see you in the next video.